Hey guys, welcome back. Quick little recap. Hope you had a good weekend. But we're here on Monday. Nothing crazy's happened with GME yet. It's sold off a little bit. I wanted to kind of go over the chart and kind of the technical analysis I see on it, um, which hasn't really applied to GME a whole lot lately. But now it looks like it's starting to act a little more rational, I guess. So basically, to me, I'm looking at these lows, and it looks like the lows are getting higher, and then the highs are getting lower. What that's showing me is that that GME looks like it's starting to consolidate, and it's consolidating quickly into a tighter range. So what happens when this happens is typically the options will lose value. I mean, since this has only been like 2 or 3 days of this, it's not going to happen too much, but if you look at this option price as opposed to when it was really volatile, it's probably gone down. Yeah, implied volatility on these were like 900 before, so they've come down. So really what you want when it's if you're messing with options, you want to be buying the premium or buying options when it's been a lot of consolidation and it's very tight and there hasn't been a whole lot of IV going on, because IV is from what's happened, not what's going to happen. So I'll use Rocket as an example. So you see here when this IPO'd, it went super high, lots of volatility from it rising so quickly, and then it dropped really fast, so volatility was up. And this means on both sides. This means calls and puts were more expensive. Given when it's falling, puts are going up more than calls. But you'll see with GameStop, actually, I was able to make money on GameStop on contracts that were actually positioned to go the opposite way it was going. But just because the volatility was so high, I put in a limit sell on some of them, and yeah, I was able to make money even though it was going the wrong way, basically. But if you look in here, this range started to get tighter. So this is when option contracts get cheaper, because there's not much sentiment thinking that it's going to break out crazy and go to 35. The longer it does this, the more the option premium decays. So in this kind of range, this is when you want to buy calls or puts if if you think it's going to go one way or the other. Then when this happens, option premium goes crazy, and yeah, then you can sell them. But also, so if you're in this zone right now and it's really volatile, and the IV is crazy, it's a good time to sell premium. So with GameStop, I mean, it's still extremely volatile. I mean, the IV on it's 800%, which is nuts. So, but just to give you kind of an example, if you did want to buy calls or puts or debit spreads on this, as it's getting tighter range, it's going to be cheaper. And then also this is kind of signaling that there could be a breakout one way or the other, just that it's consolidating. It's still bullish. It's still above the 180 moving average here. So typically it'll consolidate like this, and then if it's still in a bullish or still going to be going up, then it'll be breaking out to the upside. And that kind of happened, actually, to give an example on Rocket again. I think this was partially because of short squeeze, but if you see this was still, to me, Rocket was still bullish. It was holding this support line, and it was just consolidating tighter and tighter. It wasn't really necessarily trending down, but until then this was a huge breakout to the upside. Kind of the same thing with Corsair, but I think these were both just happened to be part of the short squeeze. So this was consolidating tighter, and then it broke out to the upside, and now it's kind of selling off because I think that was part of the short squeeze. But if you're long on GameStop, yeah, it's like, oh, what's happening? According to FinViz, this thing is still 121%. The float is still 121% shorted. So 121% of the shares are shorted, which should be impossible in my opinion. But yeah, that's why I still have a long position on GameStop until this is over. None of this is financial advice or recommendation. It's for entertainment purposes only, as you know. But yeah, this lower highs and higher lows is kind of just starting to, not short squeeze, but this is kind of starting to squeeze. When a consolidation starts to happen, it looks like it's kind of squeezing down and getting in a tighter range, basically, where the highs and lows are closer until it breaks out one way or the other. So yeah, the fact that the 9 moving average is above the 180 is still bullish, and the fact that there's still a 128 share, if this is accurate, If this is accurate, then yeah, it's still bullish in my opinion. So, and today I don't, if we break this, so here's some hypotheticals. If it breaks this support, because this is a support right here, right? Breaks this support, then it could be okay. Now it's more bearish. If the day ends up and it's down here, yeah, I would say it's more bearish. And if you watched my video yesterday, just looking at this, I said it looks like on Monday, it looks like short term we're going to be bearish, but long term it could still be bullish. And sure enough, today we're down 19%. It's bearish short term. However, by the end of the day, this could come back up. But if it closes down here below this support, it might be bearish another day or two before it's bullish, if it does get bullish again, and this squeeze continues. But I'm kind of predicting it's not going to break this support, and today it'll end up somewhere up here or up here, or somewhere in this range above this support line. So I think right now we're kind of at the low of the day. But I could be wrong. I mean, this does look like it's kind of setting up a bear flag also. But it's hard because a lot of it's manipulated right now with people not being able to buy shares and this and that, and the ladder attack that happened back here. So hard to know, but it looks like it's kind of coming down a little bit here now. But if it kind of holds support here for a bit, it probably will rebound and come back up towards the end of the day or just later in the day. So that's what I got for you on GameStop right now. I am kind of looking around since this is slowed down. I'm looking around at other stuff. I got naked shares. I know better, but I bought stuff pre-market, which is too early. I also got XL calls. XL and naked are both part of the kind of short squeeze hypothesis. XL has a 72% short squeeze according to FinViz. Not sure if that's true. Looking at the chart, it looks like a nice spot where it could go up. This is also an EV play. And then the other one, naked has quite a big short float, so 75% if this is correct. And then if you look on the chart of naked, see GameStop's coming down here a little bit more. See if it breaks that. Yeah, so I know better. So typically right when market opens is not the best time to buy options because the IV is the highest. So really that's the best time to sell premium if you're going to basically sell options. And then once things settle down, 10:30, 11 o'clock, kind of figure out which direction things are going. That's and I know that, but I didn't do it this morning. Too excited. It's Monday and all this going on is crazy. So naked, like if it holds a support, it's kind of the same thing as GME. It's still bullish, and then it still has a lot of short. But GME, yeah, and it depends. If it kind of just hangs out around here, that's different than if it actually like falls through it with volume and kind of velocity. If you look at the 1 hour, it's pretty mellow, but we'll see. By the end of the day, it might be down to 100. Who knows? That's my technical analysis on it. Hope you guys are having a good day. Yeah, don't trade more than you can lose, and we will see you at the end of the day or sooner. All right, peace out. Oh, sub up, like up, comment down. Happy money sticks around. Later.